The Barloworld Group delivered a solid set of results for the 6 months ended March 2015. Our revenues were up some 3%, and that delivered operating profit growth of 6%. And that saw a slight increase in the group operating margin from 5.5% to 5.7%. Pleasingly, our headline earnings per share from continuing operations were up 16%, and the board declared a dividend up 8% in the period. I think if I just touch on some of the highlights of the group's trading performance and start with Equipment Southern Africa, it was pleasing that that business delivered an 8% growth in operating profit, and that was despite operating once again in quite a challenging mining and construction environment across Southern Africa. However, it was pleasing that our aftermarket revenues held up particularly well, coming in at some 51% of our total revenues, and that supported the growth in our operating profits and enabled us to deliver an operating margin that was slightly ahead of the prior period. We were also fortunate to be in a position to win 2 sizable contracts during the 6 months. One with Vale directly up in the Tet coal fields in Mozambique, and that's a contract of about $42 million for some 793 mining trucks. And we also won a contract with one of the contract miners, Mata Angel, also up in Mozambique for the Phase 2 expansion of Vale, and that's an order to the extent of about $30 million US. Moving on to Iberia, it was very pleasing that for the first time since the peak in 2007, we delivered a profitable performance in the first half of this year. And that's a function of the actions we had taken during the course of last year and years leading up to then to lower the cost base in the company. So I'm confident now, having turned the corner, having delivered a 10 million profit in the first half compared to a 42 million loss last year, that business is on a sound footing going forward. In Russia, we faced some quite difficult trading conditions with the significant drop in the oil price. It led to weakness in the Russian economy, significant depreciation of the ruble, and it hasn't been made any easier by the international sanctions imposed on Russia by the US and EU. Notwithstanding that, our aftermarket revenues held up particularly well, totaling just over 60% of total revenues in the period, and that enabled us to deliver a credible result under quite challenging conditions. Moving on to the automotive side, once again a very solid result where our motor retail, Avis Fleet Services and car rental businesses all produced profits nicely ahead of the prior period. We acquired the Budget franchise within our car rental business to supplement the Avis franchise on the 1st of March, and that has been integrated successfully. We made a few niche acquisitions on the Avis Fleet Services side, in particular acquiring Avis Fleet Services business up in Tanzania. We've acquired our minority partner out of the business in Ghana, and we also acquired a small telematics company. The motor retail side delivered a good result in a challenging trading environment because new car sales are under pressure, but our parts revenues came through strongly. And on the logistics side, a flattish result on the prior period, but pleasing for us, we had a number of contract wins which will generate annualized revenues for us on an ongoing basis of an excess of 750 million per annum. On the handling business, we had quite a difficult time in agriculture Russia, impacted by ruble weakness and farmers under pressure because of that. In the agriculture business in Southern Africa, our market shares grew and our revenues were quite strong, although we did come under some margin pressure. I think if we look at the outlook for the group going forward, I think certainly through the balance of this year and probably into 2016, we will still continue to face a relatively challenging mining environment. But construction activity across Southern Africa is starting to look up as infrastructure demands are very apparent across many of the geographies where we operate. We're also seeing that our component and rebuild center is operating at full capacity. A number of planned component repairs are coming through from our major customers, and that should continue to support our aftermarket revenues. We believe that the profit turnaround in Spain will continue in the back half, and we expect to deliver a profitable performance for the full year. And in Russia, while trading conditions will remain difficult, we've got some interesting opportunities from the Power of Siberia pipeline contract. This is a large oil and gas pipeline that has been built through our territory in eastern Siberia and down into China. About 2,000 kilometers of pipeline will go through the region where we operate, and that provides quite significant opportunities for us in pipe laying and other construction equipment. On the automotive and logistics side, we do expect new car sales to come under pressure in the back half of the year, but our aftermarket revenue should hold up. We expect a good ongoing performance as we integrate budget into our Avis operations, and our fleet services business will be solid as that has a number of sort of long-term annuity type contracts. The logistics business will benefit from recent acquisitions and some of these recent contract awards, so we're expecting a much stronger second half. The handling business should also have a better second half as we get on top of some of the issues in the Russian environment and capitalize on some of the recent growth into Africa. So overall, I'm expecting a solid performance from the group for the full financial year. Our various operations have proved to be resilient in the first half, and we expect that to continue through the second half. And I'm very confident over the medium term, as the mining cycle and the construction cycle turns for the better, we're very well placed with low cost and efficient operations to capitalize on that opportunity.